Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, January 30th, 2026. It's 9:32 a.m. Eastern Time, so I'm starting the video. So as we kick off the last trading day of the month, I know I owe you guys part two of the long trade idea video. I keep punting that back because we've had all the big market leading, half of them, market leading Mag 8 stocks report this week, and that's kind of taken center stage. Like I said, the Fed meeting was a non-event, as I expected it would be. So we have half of the big Mag 8s out of the way now. Market may start to pick a direction, but remember we have the remainder, few next week, and then the outlier is Nvidia, and somewhere in between there, I suspect. Probably by next week or shortly after, no later than when the video reports will most likely have broken out of the recent trading ranges in the broad markets. I'm referring to SPY and QQQ, the multi-month trading ranges. All right, so again, let me do this. I'll continue to post frequent updates on the market. I'd like to see how the dust settles on Apple today after reporting, and I will certainly do an additional video, or when possible. I know it's more convenient for a lot of you for me to post static chart updates, and I'll try to do that. All right, so let's talk about the metals first, because I've had a couple comments earlier this morning. I saw at least two folks say, thanks, made a quick buck on shorting silver or one of the ETFs or gold. One person did gold, and I want to talk about that. All right, because I did recently in my expectation. Both on the outlook for both metals, and the miners go with it, guys. Just by the way, that's a given. I've said it many times. GDX is just going to follow gold and silver in just a multiple of gold. So, as I often say, typically, generally, when I'm bullish gold, with some exceptions I'll speak on today, I will prefer to either go long or short if I'm bullish or bearish silver and or the miners, because it's simply, as I often say, you're either going to get the call on the direction right or wrong. If you're going to get it right, you might as well get paid for it. Tie up less capital, something you said, okay, I'm going to bet on two things here, and they're both going to go in the same direction, but one's going to pay you twice as much or whatever it is. Of course you're going to go with that one. All right, but again, it's also more volatile when you go to those. You have to consider position sizing, everything I've talked about. All right, let's dive into the charts. All right, so in the comment section this morning, let me pull that up. No, it was actually in this first post I made today. I made very clear that these are, the most recent short on silver and gold. In miners, we had one a few months back when we had that other correction, and I've been waiting for sell signals. They're both. I've given you both typical swing trade targets, and they're going to be above average percentage gains, especially if you went with ZSL. ZSL is a leveraged short ETF on silver, and I made clear my reasons for picking that one, where I rarely ever give you leveraged ETFs as trade ideas. So let me just get to it again and reiterate, because everyone's going to do their own thing, and I encourage that. Pass if it's not your cup of tea. Somebody posted something about how the silver, price in Shanghai is higher, and therefore it's going to put a floor in silver. And I addressed that one. You can read that comment section. Number one, it was from a gold bug site. That's like going to Zero Hedge, and if you know what that is, it's a bear blog, and expect them to put out bullish articles on the stock market or the economy. It's just not going to happen. And gold bug sites tend to just continually, whether gold's rallying or not, and they also sell gold there. So, take your source with a grain of salt. And with that being said, I don't know, maybe that's true, the differential. And if you can arb it, great. But again, I trade off the charts, what's in front of me. I'm not trading silver in Shanghai. I'm trading silver in US dollars via silver futures and or ETFs. All right, so in a very, very nutshell, very simplistically, what I'm looking at here is this is a 30-year chart. We're going back 3 decades on the price of silver, and there have been, over the past 3 decades, there have been 1, 2, 3, 4, and now 5 parabolic trades. This is the biggest parabolic trade. So look, I'm going to be right or wrong on every single trade. I'm never going to put all my money on any one trade, but this is, I believe, to be a potential generational trade. You don't get these often. Things that go parabolic, and again, I've been doing this a very long time. I struggled to recall any parabolic uptrend that ever ended well. And when I say that, I'm saying it with a bit of, sarcasm. They don't end well; they crash. So I'm just gonna, again, whether this one does or not. And it's funny because I the sources I listen to, the amount of this time it's difference that I'm starting to hear, it's concerning. And again, I've been doing this long enough to know that that's the saying in Wall Street, the four most dangerous words. This time it's different. All right, so what I did for you here, real quick, and then again, I covered this chart several times the last several weeks here, if not longer. This was the drop measured from high to low. This is what you see here. This is the measuring tool on this charting platform. So you go there, and I'm just going to call them out for you again, tell you what happened after a parabolic uptrend ended. This one dropped, I'm just rounding off, 49%, 60%, 78%, 41%, and you have my targets right here. I expect a minimum drop, and again, maybe it goes higher, and then this number is going to go higher, because this is still going to be my pullback target, unless this thing goes to 200 an ounce. Crazy. Not going to happen, but hey, anything's possible. And I promise you, I will not be riding a short up to 200 an ounce silver. So I'm looking right now, assuming yesterday was a top, and we'll know today will be a big day. Today and or next week, if they stick save this thing and buy up this big drop in silver right now, they've got the potential to keep the parabolic uptrend line intact, and that's the key. I've been stating repeatedly, we got to wait for the decent sell signal, a clear break of the parabolic uptrend line, and or some type of pretty serious bearish reversal pattern, candlestick reversal pattern. But let's just play the game. Let's just go off that and assume right now that we just peaked yesterday. And, then I'm calling for about a 56% drop minimum. And again, I know from things I've read out there that just the vibe in the market, that's heresy among silver bulls, gold bulls. But I'm looking, and again, it's a price target. If I didn't have all this to look at, if I couldn't see this, it just eyeballed the chart. If I hadn't measured it out, that would still be my target. And I think that's a very reasonable target. You can here's the advance. You can put up Fibonacci retracement levels, do what you want out of it to come up with targets. They're all going to fall in the normal range. Remember, everything is relative. So if you measure the percentage gain, to me, I think that's a very doable and likely target. That's it. Hard stop. It's either going to happen or not. If we go up higher, and guess what? If this thing goes to the moon or has some kind of weird, it is a parabolic uptrend that for the first time, and a rare exception, I should say, ends very well. Meaning you just have a normal correction, high level consolidation, which is bullish, and then breakout, because that would work off the extreme overbought conditions. You have to, at some point, you're going to get that. Again, I put the odds on that at very low probability. I trade, remember, you guys know me, I always say I don't trade in possibilities, because anything's possible. Silver going to 200 an ounce before it crashes or corrects is certainly possible. Extremely improbable or unlikely, in my opinion, right? So that's it. So there's my target. Take it or leave it. Minimum target, 56%, which pales to what we just had today. So I see people covering. I think there's a lot more meat to be sheared off the bone, especially if these sell signals stick. I'm going to get to that in just 1 second, guys. And then my target range, that's a minimum target with a max target of a drop back down to about 35. That would be about a 71% drop. And again, I know, complete heresy, isn't it? Calling for a 71% drop in the most, beloved asset right now, or, among those in it, and support, and just chanting all the reasons why Trump is, debasing the dollar, and that's the only way the U.S. gets out of this mess and all that stuff. And I've heard that. I just, sat down, listened to, a YouTube channel I listen to every now and then. It's one of the few I follow, and marching out and all those reasons. But here's the thing, guys, with any investment, any whether it's a stock, silver, you have to ask yourself, how much of that, what you're hearing now in the headlines, has already been priced into this? All right. So that's why I trade off the technicals. I will factor fundamentals in, but I can tell you this, I've been doing this a very long time. By the time you read about something, it becomes really mainstream in the media, the narrative's quite often mostly, if not fully, priced in. So that's all I'm going to say. So we can sit here and, guys, I welcome it. This blog, encourage discussion of all trade ideas. I very much encourage opinions that might not be aligned with mine. Healthy debate, that's all I ask for. Keep it respectful. Share your views. You might take the other side of a trade, and you can post all the fundamental arguments you want, but I go off charts. So that's it, guys. There's your ranges. Oh, and the 71% max target is not out of line. This is the biggest parabolic advance, called bubble, whatever term you want to use, in silver. That one you had a almost 78% drop. This one was 60. Again, the small ones were 41 and then almost 50. Okay, so I don't think those targets are a stretch. Now, the thing is, as I stated, the biggest gains in a parabolic advance come towards the end. So, but it's typically when you break that momentum. That's why I think today and next week, if we, and I'll get to the shorter term charts in a second, break that out, it's going to help really, in my opinion, solidify the sell signals and then sharply increase the odds. Right now, we have nothing more than a 15% or so pullback in silver. That's kind of, it sounds crazy, but it's the norm lately. Silver's been moving up and down 5, 10, 15% a day for the last, month or so, on good days, right? All right. That's it. Oh, and I did one more thing for you. I know I've already shared this chart with you. So what I did is, let's start from the left here. So I measured out, as I showed you, and you could, do the same. I encourage you on your chart, measure out those drops after the parabolic advances. And so remember, I told you there's that initial boom. Once things break, it's very fast. The rush for the exits, if you don't know what you're doing and you happen to be the poor guy or gal that buys at the end of a parabolic uptrend, your losses immediately are blazing. And if you're a short seller like me, and you got to be Johnny on the spot, and if I miss this one, I'll hopefully get the next one, right? But the timing has to be precise. You got to get in quick, because if you wait just a couple days and you wait for Kramer to come out on CNBC and tell you it's time to sell your silver or short it, you've already missed most and probably all of the initial move. And that's the point. You should be buying the first counter trend bounce. So what I did for you here on the left, I know you can't see it in the video because I can't make the numbers bigger. I'm going to read them out to you. I measured the initial spike. If you can see it here on this chart, from the high, from the low. Again, this is a 30-year chart, so it's, it's hard, and I'm using weekly candles, but it's just a few weeks, 29.2% drop, right? But straight down before you got a decent counter trend bounce, right, on that one. This one right here, from that point to that point, just again, I'd have to really zoom in personally to see the candles and to measure it out. Let's call it maybe a month or so. 25% drop. Okay, the initial drop before there was any measurable or decent counter trend bounce. There was your first counter trend bounce. This one right here, from the high, once it burst, it was a straight down shot. It looks to me like a week. I can't see the candle, but I've measured, that's the bottom point. 40%. In other words, in the blink of an eye, relatively speaking, of course. So weekly chart spanning 30 years. It was a 40% drop, and then a healthy counter trend rally. And you can just eyeball all these first initial counter trend bounces. They are in the realm of a typical one, which is about a 30. If you use Fibonacci's, which I do, Fibonacci retracement levels to gauge how far a counter trend bounce might go. Typically, the 31.8 up to the 36.2. Why am I blanking out here? I use these all the time. Up to the 61.8, and a 50 is in the middle, or halfway retracement of the previous move down. And then you got that, but then the next leg came, and it was every bit as powerful, because that's the point of recognition. The first dip buyers, this is classical conditioning 101 for those of you that took psychology in college. Pavlov was the one that, conditioned his dogs. He'd feed them and ring the bell. They'd salivate and keep doing that. And then he learned you could just ring the bell with no food and they'd still salivate. They expected that food. That's classical conditioning, right? Or Pavlovian conditioning. And then you have the dip buyers come in and buy each and every time. And that rip, by the way, is very powerful. You don't want to be on the wrong side of it either. If we can be on the right side of it, great. And then the next leg down. And then again, then it's ended. That, once a parabolic advance ends, typically that bull market is over. So that's what I'm trying to speak to here. Both the potential for those quick, shorter term trades that I gave you on ZSL and or silver futures, and gold, GDX, or you can go for what I call the prize and the good part of the bulk of the big drop down there. And again, if you're nimble, it has to be in your wheelhouse, your skill set, risk tolerance. You start stepping in front of a security that's going up and down 10, 15% a day. Just a couple days on the wrong side of that trade, you're going to feel pain. So, let you manage your own positions and decide if to take it and not pass. Learn, watch. All right, so let me continue on. Okay, so the initial drop, 43%, 25, 29. Right here was the initial drop from when I actually need to move that line up. I missed the high a little bit. But either way, I have it at 28%. Again, quick swoon down from the peak. And then before all said and done, it fell 48. So there it is. So here's your average. I'm going to read them out. 28, 40 on the initial drops, 25, and 30. Okay, so that's how I analyze charts. That's how I trade things. That's what technical analysis to me is all about, is trying to use past performance, studying a chart. How did a particular security, what silver does has nothing to do with what treasury bonds do. The charts don't look the same. They don't go parabolic. It's the nature of this beast in this beast only. This chart, the trading dynamics of silver are unique to silver. They might mirror some things. Natural gas, wheat also often goes parabolic, has similar charts, similar traits. And that's it. So let me move on and show you one other chart, and then I'll get to the short-term charts and we'll wrap this video up. Okay, again, as I started the day with the first post, we hit support. I'll get to all those shorter term levels in a second. Silver, the ETF, which I'm going to guess there's a lot more retail traders, especially, even a lot of institutions will use those ETFs because they're liquid. Gold, GLD, I know that. Hedge funds will use them as well. So not all pros use futures, but what I'm getting at is silver hit really good support this morning pre-market. And that's why some of those trades fell just shy. It's a tail wagging the dog situation. That's why the same reason, when I trade the indexes, I want to see, I won't take a buy signal, a breakout on QQQ unless SPY makes a commensurate breakout of a similar breakout of a roughly equal, similar resistance level. All right, moving on here. This chart I covered recently, and it speaks to someone who covered a short on MCG. And by the way, and that's fine. MCG, I should speak to that later. There's, I know the SI, the silver contract's a big contract. Then you have QI, half the leverage, and then SIL, the micro silver. And at MCG on gold, you have GC gold. And then the MCG is a micro. So just like natural gas, you can, natural gas has NG, the big contract, QG, the, NASDAQ 100, NQ are the NASDAQ 100 futures, and then MNQ are the minis. I just want to say that, and the charts are always the same. They use the same price levels. And so, but where I'm going with this now is that, I expect, especially in the coming months, outperformance in silver and the next bear, whether the market goes up or down. And I'm sharing this because you could actually do a delta hedge, a trade where you're taking, you go long gold, short silver in equal amounts. You may want to beta adjust that, maybe take a little bit smaller amount of silver. But what this chart shows you, and this is what I shared with you recently, I have a range down here, a range of about 3 lines. And I'm going back, by the way, this is the gold to silver ratio going back 40 years, 4 decades. We're going back into the 80s here. Think Reagan, whatever we have there. We're going to the mid 80s right there. Long time chart, and a lot of traders will use this. So you have the extremes. That this is really where it starts to get really high. What that means is when silver's outperforming gold, you're going to get up here. This is the usual range it caps at. You've had a couple extremes, including this one recently. The only other time in history it got higher than that was during COVID right here, right? And that was quirky, a lot of quirks in the financial markets. And then on the bottom, I have 3 lines. Again, same thing I shared with you recently, going down from the 50 down to about the 40 level there. And so, again, for the past 4 decades, we get down here. Usually that midpoint line is what stops the ratio turns. And what that means, when the ratio is falling, it means silver is outperforming gold. And you get down here and it's to an extreme now. All of a sudden, an ounce of silver is just, has gone up a lot more than an ounce of gold in relative terms. And there's that, it's a mean reversion trade, guys, and it's simple, and it never stays there. The thing about it, I can't tell you which line, if any of these 3 that it's troughed at before, other than this extreme example right here, that was in 2011. Which one it's going to reverse at, I can just tell you yesterday. This is an end-of-day chart, just like the first chart I should have mentioned that I was covering on silver. But we're at that level, which has pretty much contained the majority of the drops. Now, again, if the buyers are going to step in here today and or next week and ramp and keep the uptrend in silver going and bust out, new highs and keep going, yeah, we're probably going to fall down towards the bottom, maybe even set a new record here. So again, I'm open to all of that. That's a possibility. And again, you don't want to be short silver if it is going to rip up and just blast through new highs and keep going and keep this parabolic trend going. However, what I can tell you here, a couple things that we're getting to the point, and again, this is where you want to favor, at this point, start to favor. So maybe you've been in silver, right? And that's been a big part of your holding, or maybe all of your holdings. But you're still bullish the metals for the reasons that everybody's saying. The U.S. is just going to continue to base the dollar and print money, and that's the only way out of it. Or whatever other arguments that the case can be made, it might be prudent to start shifting money out of silver into gold. So if you look at just silver, what I've done down here, this is silver, this is gold down below the chart, the price. Now I'm in log scaling. Remember, you're looking 40 years, so it's a big price differential, especially in silver. The only way to effectively analyze this chart is use log scaling. If you use linear scaling, aka arithmetic, you're just going to see you're not going to be able to see all the trends and the changes in there in price. All right, it's just going to be flat and compressed. So here's what I did. So again, only time will tell, and time will tell quickly because this never stays low at V bottoms. Once that ratio troughs, it's a quick ride up, and this is an end of day chart. So if I start to see this, and we start to get up here, especially back to this pink line, that's kind of an average right there, midpoint line, then you can say that's probably, the top is probably in this ratio. And I can show you what happens when the top is in the ratio. You might say, well, yeah, Randy, but they can both still go up. It's just going to say gold's going to go up more, right? Well, yes, that's true. However, what happens when the ratio troughs? This is the price of silver right here, right? I put these dotted lines. I think you can see the dashed lines go down. Not with zero exceptions. When the ratio peaked, that was it. The bull run was over. And I measured them out for you here from trough in the ratio, which was the peak in silver prices. It fell from, that was 1987 to 93. There was a bear market of 64% silver. The next trough was right here. Follow the dotted line down, peak in silver, and it fell 38% to that point right there, and about a little less than a year. Then there was another trial. The ratio kind of had a little blip back down in the range, peaked here, right there, and it was about a 31% drop. Couple double taps down at that level there. First one was about a 34% drop. And there were corrections along the way. It was really a triple tap right there. 1, 2, 3, triple tap of the level. And that final one before the ratio really reversed, again, got up, back when you can see a clear reversal back to the midpoint line. Then the big drop came. Silver fell 56%. Massive, unprecedented drop in the ratio in 2011 with that huge parabolic run in silver. You can see, just look at this chart and look at the price scaling. You can see silver like now, right now, vastly outperforming gold. The ratio got out of whack to levels not seen. And boy, did you pay the price if you chased that rally in silver and bought it anywhere near the high and held on to it, because it fell. It went into a multi-year, nearly a decade-long, 9-year bear market before all said and done. 74% drop. Most of it came early on in the first few years. Most of that drop. Okay, so that's it. So we're here, and this is historically where the ratio ends in this range. We're right in the midpoint of the range. Hard stop. You take that analysis with what you want. That's what. So what I'm doing here is I'm trying to, because I know the few that might be listening to my voice that are still very bullish longer term on silver and gold. And guys, if I'm wrong and you're right and you keep your positions, great. Very, very minimum, consider where your stops are going to be. I've been doing this long enough, and I've fallen in love with securities over the years. Some have treated me right, and some just will, for you just can't understand. But whether it's technicals, fundamentals, they'll just keep going down, down, down. And so it'd be a shame to let huge profits evaporate, especially and turn into a big loss, because most people buy in these parabolic uptrends. Most people are buying towards the top. That's what's fueling that parabolic advance. All right, that's pretty, painting the big picture right there. Now let's just drop down to the shorter term charts and we'll wrap this video up. Okay, remember, as I started that video out, we had the long term, we were looking at what was a 30-40 year chart, and I had the parabolic uptrend lines. I can't replicate those on this charting platform. Plus, I'm on a shorter term time frame. If I go to a weekly, you can see, and again, I'm using log scaling. If I didn't use log scaling, it would look even more parabolic. Log scaling adjusts the price so every candle is equal in percentage terms, not dollar terms. Because when SIL, which we're looking at here, the silver ETFs, is selling at $11 a share, a 10% move is $1.10. When it's selling at 110, which it is now, a 10% move is as much as each share price was back here. That's what log scaling does. It corrects that for you. Only way to analyze a security that's non-parabolic, in my opinion. That's just a pro tip to any beginner. I just set all my charts to log scaling. It's really few that's ever worth doing linear scaling. So there's your parabola. And parabola exists if you don't have a parabola line tool like I do on that other charting platform I showed. It's just a series of uptrend lines with increasing slopes. Right now I've dropped down to a 60-minute chart. Oh, let's go down to the daily. So, this right now, if, these are just, that's an initial target. But if we do this, that parabolic uptrend line is going to be broken. And remember, it was an end-of-day chart, the first one I started with. So it's not going to show what happened today or, until later tonight. So that's it. So it's pretty good start. I think that line's going to be broken, I think, and therefore I'll call a top. I don't care. I'll call tops and bottoms and things all the time. It's what I do. I do it for profits and a living, not for bragging rights. I don't go on social media channels, any others. I can't tell you how many times over the years I've been solicited. I don't even check my inbox anymore on that stuff. So this is what I do. So if it goes back up and we make a new high, guess what? Guess who's going to be talking about the next big drop in silver up here? I'm going to be looking for it again if this isn't it. But I think this has a good chance to be it. Gold too. Gold, this is a daily chart. That's once you clearly bust the momentum, it's like a gut punch to the bulls. and it just starts to, it's usually what it takes, in a parabolic uptrend. That's the definition of it. You go parabolic, you don't get such corrections. And again, if I were to draw, parabolic uptrend line, right now it appears to be broken, but you know me, I say this often. When trading on the daily time frame, all that matters is the daily close. And the chart I started out with, the chart of silver, was on a weekly time frame. So, like I said, if you wait a week to initiate a short position, you're probably already going to have missed most of the initial drop. I just showed you that on the first chart, the quick swoon down. So that's why, I've been saying, and I said it when I threw the trade out to you on Monday with ZSL, get in and start a position. You can add to it. Well, I think you can add to it today. We're coming up on, support levels. I told you that silver bounced off. There's gold. That's a 60-minute uptrend line. But silver this morning, I'll turn it on for you. Let's do pre-market trades. You go like this because my pre-market candles go away once the regular session starts. Price style, pre and post data. Turn it on right here. Show last two sessions. So see, I had that 86.46 level. You can see on it pop up. I created that back on January 27th. Haven't modified it. What did we hit today in pre-market? We hit a low of 86.20. So we hit it. It's nice support. There's a whole shelf right here of on the volume price histogram bars. That's the bounce they bought. But then look, they took it back to this trend line, and so far very muted buying. The dip buyers aren't really showing up as aggressively as they have been. That's also an early tell. We'll see. Again, the day is young. Today's Friday. So yeah, you're going to get whatever happens today, you print on the weekly. That's right. I just almost forgot to mention that. Oh, and then one more here. You get GDX, guys. Again, it's a comparable trade. I gave you these targets recently. There was an uptrend line. It broke. T1, T2s hit. And then these are your next targets here. These are just initial short-term pullback swing targets. But again, if the bubble bursts, there's a lot more downside. You just then go out to the daily or weekly, and these are the longer-term targets I have right here on GDX. Bearish engulfing candle yesterday. There's certainly a potential top. And at least pull back to T2. That's going to be the 200-day moving averages. That's a 36% drop in the minors. That would be a nice area to cover short. I never showed you the my long-term chart of gold. This is one of them. I have many boards. This one I'm going back to the mid-90s. And, of course, again, I've said this often, to be, anytime to trade silver, the miners, you have to look at the big brother, the leader, which is gold. So gold, once in a while, also goes parabolic. That wasn't the steepest uptrend. There was a trend line there, but you did have a parabolic run, broke, multi-year correction, bear market. This was the powerful breakout here. We had a trading range, consolidation. This is like, I talk about the stock market. Just because the last trading range went that way and we had the big correction we traded last year, I'm open to the fact the stock market could do this. And this is, what comparable to what the stock market's in right now, the S&P 500, NASDAQ 100. And that was the breakout in gold. But what happened, it was bullish, but then gold started to go parabolic. Again, I can't draw. This is the only, you can draw a series of, which I have there. I don't know if you can see them. Here, I'll jump down. A series of linear uptrend lines, but let me go take it down for you. Let's just go to 8 years. Let's see a little closer. All right, so you can see this is the parabolic advance in gold right here. It's been going up, 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 and now it's gone to the, almost straight up. And so again, you have a series of uptrend lines. You can see them on my chart. And, each of those when they break, but when the parabolic trend line goes. So I just wanted to say that, it's not just silver that's gone parabolic. Gold's gone parabolic because silver will correct. Silver can outperform gold. There's that whole gold silver ratio thing I covered earlier. But if you want to tuck it away short and you want to swing for the prize, hit that grand slam, 50%, short trade, and you leverage that up, because I do, again, it's one instance after parabolic uptrends. That's when I like, for IRAs and accounts that I even have. I trade futures on my primary trading account, some others, but I'll use those leverage ETFs because, again, that leverage is going to work in your favor. So if it is a swift move down, let's say that initial 30% drop plunge in silver. well, you're probably going to get, you know, instead of 60% on, or yeah, 60% on ZSL, you probably get 80 plus, like I've showed you recently. So that's it. And then at the end of the day, like I said, it's one trade. It either pans out or it doesn't. And so let me get back to work, and I will. I had quite a few alerts go off today, but again, I want to see the dust settle on Apple, and then I'll do an update on the Mag 8 stocks in the market later today, and I'll try to get to the remainder of those long trade ideas. We still have a lot more long trade ideas out there than short trade ideas. I had a few alerts pop today. So I'm gonna, if I'm done with the gold GDX thing, I'm just gonna go over my alerts because I haven't had time to check them. You guys come first and foremost. So I had alerts pop off. Just want to look at them. AVD, it's been popped the other day, but it never closed there, and it's popped. It popped yesterday and printed a close, but it's got to take that $5 level out and then punch there. I still very much like this one. Bull flag too, guys. Look at that. And you're going to need to see the rest of the ag input stuff. It'll help. It'll help to see them cooperate. But you got a nice little bull flag there. There's your flagpole breakout. This is going to be the measured target roughly to there. So it should probably overshoot it, take us to my, I might, oh, I didn't mean to do that. I didn't mean to move my trend line there. There's a level there that's going to come in with the bull flag measured target now. So I might adjust this. I'll get it out to you in a post today if this pops here, but let me measure. Here's how you do it. You can start from the lowest point there. You can be a little more conservative to where it really ripped, but I'm just going to do that for now. Let's see here. And then you add that to the lowest point of the flag before it breaks out. So yeah, T2 is going to be, I might revise it down to 625 to be safe, just so we won't miss the turn. But that's probably where you're going to go, closer to that 662 level. If it does break out, that's going to be another 30% gain. Remember, we already hit T1 here. It's an existing trade. We're just looking for the next leg up, but I highlighted that as a setup. And I'm just going over that today because I had a price alert. I had a price alert on gold. We already covered gold. I had a price alert on Nokia. So when I get, it's earnings season, so I look, make sure there's no whipsaw. So far a whipsaw, I'm going to tweak this line a little bit down and put it there. It's one on my radar, but I'm not. No, I don't like it. I don't like the chart. I'm not going to take that. Tandem, I had an alert. This one's I highlighted as a long trade idea. It's hugging, it's testing the 200-day moving averages after coming off that big divergent low. So one of the long trade ideas right now, unofficial, I think. Copper, that investment brokerages. They're going to, Robinhood's still one of my favorites. I told you guys that before. When the turn in the market comes, Robinhood, I see big gain potential on the short side. That one already triggered. Okay, I'm done here. I'm just looking. Those are the ones that went today. All right, let me wrap the video up. I just wanted to make sure sometimes I'm doing these videos, alerts go off, I don't look, and then boom, something's ripping. And so that's why I wanted to cover it in the video before I wrapped up and got it out to you guys. Okie doke. All right, my thoughts on the metals. I think I couldn't be more detailed. And the levels to watch, the things that will either continue to firm up the case for a longer term short, or even just those short term targets. You just want to, just get the quick, pop. We pretty much effectively hit that level in pre-market. I told you always on the right side of the chart, I always say these are the actual resistance levels I mark, and then you want whichever one you're targeting or multiple. Some people take partial profits as each target's hit. You just want to set your stop loss order a little bit below, and a little bit is relative to the price, obviously. All right, guys, I'm going to wrap up here. This has been Randy Finney with Right Side of the Chart. Have a great day.